many sights to see.
Hello, traders. Gary Wagner here. It is approximately 10 a.m. in Honolulu, Hawaii. It is Tuesday, the 12th day of July, and this is the daily report for gold. Traders, we have gold currently trading up approximately $15, $16 higher. When you adjust for a strengthening U.S. dollar, that takes away about $1.20. You get a net change of about $14.70, or up almost 1% on the day. First chart that I want to take a look at is going to be a simple line chart. It is our 3-minute line chart. Let me go ahead and blow that up for us, traders. And what you can see here is that the market itself, which was trading in a fairly defined trading band, you have this low that it made after it sold off the other day of 1541, the top at about 1555. You can see this top right in here matches. Market trades lower. It finds support. And then it starts to meander to the upside. Now, when I say meander, as you can see, the market came down up, but then continually tested support in this area. And then we had this clear and utter breakout that began as the market broke above this 1552, a very critical level, and pretty much a straight linear drive straight up to the high of the day, which I believe is around 72, 73. We have had a little bit of profit taking coming into the market, and we currently have the market, as I said, up around $15 at 1568.99. So call it 1569, 1570 in that area. The key is this. As I reported yesterday, I talked about the fact that if this market could not take out these particular highs in here, it would probably go back down and test. But if it was able to break above this point, this 55 area, this was that old high. We had the high of 53 and then 57. If it was able to break above that, there is really no place for gold to go but to retest the record highs, which of course are at around 1577. We see that that has come to fruition today. Traders, the next chart that I want to take a look at this morning is our weekly trend analysis. Let me go ahead and blow that up for us and move that over just a little bit. And here's what I can see, and this is what we were talking about the last couple of days. First of all, very simple trend line. I am using these lows right in here as my angle intact. There's simply no doubt that as this market came up, we had a solid breakthrough and breach, and this was a correction that we absolutely experienced. We saw the market find very, very strong support. If you take a look at that, 1473, we've talked about that number before. We get our band of support right in there. Then the market takes off higher. So you can see that it was able to really bounce off of that. But what's really interesting to me now is the fact that we are well over this trend line again, and that trend line absolutely is back in play. The two other charts that are on the screen are 360-minute upper right Henkin format, and this 360 I've been using as a Elliott wave count and cycle timing, both in Henkin format. Let me go ahead and convert one of them back to candlesticks so we can compare. And so now, as you can see, we've got both our 360 in a candlestick format as well as in a standard format, and we can kind of look at them and compare them. Now, one of the things that I find is interesting, as I talked about in my article yesterday, let me go ahead and blow that up. This is our current Elliott wave count in the way that I'm looking at it with a Henkin format, which to me, the reason that I like this Henkin format, it's very clear to see as you get these particular peaks and valleys with that color change, of course. Now, the fact that we have broken over these two tops, this is 1553 and 1557, is extremely significant because, as I said, now we really have nowhere to go but to go up and test these highs. Now, fundamentally, we have some issues that have been prevalent in the market. We've been talking about them, but we've got the crisis over in Europe, the currency crisis, the debt crisis, really. Italy's entering the mix, of course, right now. That's big. Greece has been a player in there. You've got Portugal and Spain. You've got to keep your eyes on that also. So you've got that. There were hints today, hints of a possible QE3. And that, of course, would be huge. Now, the elephant in the room, and I've said this before, that nobody's talking about, is the debt ceiling that has to be dealt with by August 2nd, and the inability for Congress in the United States and our government as a whole to put their fiscal policy in order. You know, the issues that I see here remind me of an old cartoon, which is a cartoon that I watched when I was a child. And there was a gentleman who used to always say, "I'll gladly pay you on Wednesday for a hamburger today." That is how our governments are running their fiscal house. They'll gladly pay us later for something today. The realization is going to have to come that we need to put our fiscal house in order. Now, that being said, my sentiment right now, as I said, is that this market will go up and, as you can see, test these areas. But when we take this and convert it from our Henkin, which looks a little bit different, into a standard candlestick chart, I think you're going to find this interesting, because what we're seeing is that, in fact, when we look at this bar chart, you can see at this point that we have taken a stab at this particular high in the market. So the key is, will we be able to overtake this particular point? Well, my sentiment is absolutely yes. As I said, I believe that gold is going higher, and it's going to be going much higher. So how much higher is it going to go? For that, I really want to take a look at this one chart that I have up on the screen now. It has my Fibonacci extensions and retracements so that we can do some forward projecting. Let me kind of pull that out for you. And what we're looking at right now is the fact that this marketplace itself has gone and tested once again this record top. Now, it hasn't been able to close above it, but we've got solid trading activity right now. It's trading well over 1560. To me, that is extremely, extremely bullish. And as you can see, these tops have come in and matched. Now, with that in mind, where do I think this market can go? Well, what I call my sweet spot, my particular zone that I feel we have some really, really strong potential to get to right now, is between 1608 and 1614. The next target that I'm going to look at is going to be 1647, 1641. These are our two Fibonacci areas that have harmonics, and those harmonics are very, very strong. So these are the two target areas that I would be looking at. Now, this is not in the next week or month. I am looking at throughout the year. As I said, my belief is going to be that we'll probably go into the mid-16s somewhere between the last quarter of this year and beginning of next, if not sooner. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange